Hello traders, welcome to another video in this diary. Today I'll be going over the best type of account for both beginners and pros and what's the right account for you. Well, the right account depends on your experience, it depends on a number of factors which we'll go over now. And the more experienced you are, perhaps the more flexibility you like and the more you would want to check carefully the account you're going to sign up for because it may not suit your needs. Okay, so what should you know? Well, the most important factors to take into account are the deposit amount, the risk you're going to use, and your trading style. So with the deposit amount, there are accounts for $100 or less, and then there are accounts for much bigger, like 100,000. So if you really starting small, then you may want a different account to keep your risk to a minimum. Speaking of which, you do need to keep your risk low. An account suitable for smaller sizes would only allow you to take smaller risks, and also accounts with low leverage would be more suitable. So lowering the leverage is lowering the risk, and many accounts can be 50 to 1 or 30 to 1. And when you get to higher leverage, like 100 to 1 or more, then the risks go up because you are then able to buy a larger volume, a larger amount of, you have a larger amount of buying power, and therefore there's a greater risk of loss. Then we've got your trading style. And if you take, for example, one trade per day, then you will not be risking much. Typically, you will not need the leverage if you are taking, for example, 10 trades a day and you have many trades open, then you will need a higher leverage because otherwise you won't be able to have that buying power. So the account also depends on that. And of course, you'll also be paying higher fees if you're a very high frequency trader, because then you'll be paying commission and fees on every trade that you place. So how do you choose your account based on these factors? Well, we have these account types. We have the demo, the mini, micro, or cent, sometimes it has a different name, the standard, and the SCP or ECN, and then we'll talk about leverage. So the demo, as the name suggests, is just a demo account. If you're practicing, you want to be consistent, make sure you're taking the right trades, you're just testing out your strategy, you're seeing if you're going to be consistent, then that is a good account to start with. Of course, not real money, but good way to practice by lowering your risk. Then you have these live accounts. Now, the mini, micro, or cent account is usually around $100 account or lower if you're starting with less than that. And that will only allow you to take trades with 0.01 lots, which is roughly equal to 10 cents for every pip approximately. Then you have the standard account, which may be an account for around $1,000 typically, and you can trade with 0.1 lots, which is approximately $1 per pip if it's in dollars. That's never an exact amount, but that is a rough calculation. Now, standard accounts have their own fees, and then we have SDP and ECN, straight through processing and electronic communication network. These accounts are direct to market. Sometimes on a standard account, the broker will trade against you and take the other side of your trade, and therefore they have an interest in you losing. And SDP and ECN accounts are more accurate, more direct, and they have lower fees, lower spreads. They also have higher leverage as well, which you'll be aware of. So those with high frequency and tight stop losses may want to go for these accounts as a more experienced trader, because then your fees are lower and you have very good prices, the entries of your price. The price doesn't move up and down, spread doesn't move up and down so much. And therefore, you're getting accurate prices and better results. However, that all ties into leverage, because you really want to have a low leverage as possible to keep your risk to a minimum. 50 to 1 is fine, 200 to 1 is already getting bigger, and there are those which have much higher leverage, 500 or 1000 to 1, but those are really far too much because you risk losing your whole account and you want to keep leverage to a minimum. So when you're starting, these are fine, and then when you are getting a bit more experienced, the STP or ECN accounts are preferable. But the important part is to have consistency, to have your trading working, and then think about the costs, think about the entries, and the type of leverage on that account that you're going to choose, whichever account of these you do choose. Keep the leverage to a minimum. So you don't want to risk losing a high amount of your account, because let's say, for example, you go from 100 to 50, that's a loss of 50%, 50% loss. However, to go from 50 back to 100 is going to require you to win back 100% profit. So bear that in mind, because the numbers are not as simple as they look. Okay, so that's a rough overview, and as a summary, let's just go over the main points here. Keep your risk to a minimum. That is the main part. You need to manage your risk carefully. Focus more on the consistency of your trading. Make sure you're doing it regularly with regular results. And then lastly, check the costs of doing business, the spreads, the commissions with a broker on that account before you sign up, because they will add up. They might be small amounts, but they will add up bit by bit overall, and you will have a large total at the end of the month. Okay, so thank you very much for watching, and thank you for joining us on another video, and see you on the next one in this Diary of a Trader.